Your accountant or your accounting software says you've got a profit and you're saying, well, where is the cash? This is one of the most common things that pops up for business owners, and there's only really a few places that this cash can be. So the next 5 minutes, we're going to take you through the different buckets of where your cash is hiding. And once you learn this, you don't really have to learn it again because you know that you can then go and explore where it may be. Now, firstly, for a lot of people, we need to address the elephant in the room. Maybe you've drawn the money out of the business. And then when you take drawings, if you're not on a PAYE salary, of course, you're going to have tax to pay on the profit at some stage as well. So your money may be tied up in the drawings that you've taken out of the business and the tax that you've paid over to the IRD. Now, the next piece you want to think about is accrual accounting. And we don't mean that accounting is cruel, but this kind of is when accrual accounting, ACCRUAL, works like this. So you go and you do a big job and you send me the invoice dated the 31st of March, and then I get till the 20th of April to pay it. But in that time, of course, you've already paid wages to do my job. You've had to pay for some materials. You've incurred costs in the business. You've paid subscriptions. You've paid direct debits. You've even paid some loan payments, which we'll talk about shortly as well. And you're giving me till the 20th of the next month to pay it. So you've effectively become the finance company. You've financed me into that for another 20 days. So in accounting terms, we're going to recognize the fact that you've done the work, generated the revenue. That's going to then lead to your profit after those costs, but you're not going to get the cash until the next month. So profit does not equal cash. So what you want to try and do is optimize your business for cash flow. And again, that's a separate topic for another day and a different video, but we've done a ton of podcasts about it. But the more that you can speed up the cash collection, you're going to be less frustrated between the difference of cash and profit. But remember that for most of you, when you're sending an invoice and dating it, as of the date that you date it, that is when your accounting system is going to recognize that revenue and therefore the profit. But you may not have collected the cash. And the simplest way to think about this is if I didn't pay you, technically, you've still done the work, recognized the revenue, therefore the profit, and the IRD are going to say, you got a profit, you need to pay us some tax on that profit. And you're going to say, well, I don't even have the cash, which that is, of course, why you need to bring that cash in, and you need to be careful about letting people not pay you. So the long-winded answer there to this piece, but to really draw that through to you, is that sometimes your cash and your profit is actually tied up in debtors, accounts receivable, or the people like me in this example who owe you money. So you've got to try and get it back from them, because then it's going to move it over into your bank account. And side note to that, sometimes you can look at what your total accounts receivable and invoices that you've sent are and think, if I had all of that money and it was in my bank account, how would I then feel about my business? And I bet it is a lot more confident than when it's sitting out there where you've played finance company to your customers. Now, the next one is a simple one for stock businesses. You may have your profits and your cash tied up in the next round of stock that you've purchased, and you've used your working capital, so your profits of the business, to go and buy more stock. You've got to wait for it to turn up, to then sell it again, to turn it into cash, to then put some tax aside on those profits, to then go and buy some more stock, and round it goes. So an e-commerce business, as an example, can become very frustrating for the business owner because they truly feel like they're never really accessing the cash. There are solutions around access to debt and things in there, but that could be where some of your profit is as well. You may have it tied up in stock. We have a client recently, and they have to carry a number of parts and different equipment and stock that their clients are going to need, and they need it quickly. So they have to have it on hand so that they can do the sale. So all the time, some of their profit is tied up in the fact they've used that profit and paid cash to then buy that equipment that they've got sitting there ready when their customers need it. Now, the one that most of us forget as well is that a lot of SME businesses in New Zealand are in debt. And they have asset finance, they have term loans, they have vendor finance. Any form of debt that is going out the business is obviously sucking cash out of the business. Now, if you think about it, you have your sales, then you have the costs that you have to pay for, but the loan provider doesn't give a shit about any of that. Every month, they're going to direct debit you, or you're going to have set up an automatic payment that's going to pay back that debt, because you're not going to lose the business via not paying for the debt, are you? So you're going to always prioritize paying that. Now, this is why the likes of the vehicle finance providers and asset finance, they always direct debit your account to pull that out. So they want to be in control of the process. You should think that there's actually an answer in how you could run your business towards your customers and clients there as well. What are those big corporates and those finance companies teaching us? They're not trusting us, they're pulling the money straight out. But of course, your debt repayments, you then want to times them by 12. That's over an annual period, and think, okay, there is debt that I am clearing. To clear that debt, you have to pay for it with after-tax profits. So again, your sales less your expenses, and then you've got your profit. You'd have to put some money aside for tax. And then what you're doing with some of that profit is paying back the debt dealers and the people that have lent you the money for the assets that you have purchased or whatever it is that you've done with it. So of course, if you've got monthly installments of say $5,000 in total, well, over 12 months, there's $60,000 worth of debt that you're trying to clear. Very, very simply, that's like $90,000 worth of profit to then put $30,000 aside for tax and then have $60,000 to clear down some of that debt. So that is often where a lot of cash is hiding, that you're not thinking about the debt repayments that you've done over the course of a 12-month period. So you want to be tracking your assets less your liabilities and the fact that your debt is decreasing, because that is actually a metric and it's a form of success on your balance sheet where you are making progress because you have less debt to pay and hopefully the assets are maintaining their value or they're generating income for you, which you're then driving a profit in your business. So there's some very simple buckets of where your cash may be stuck in your business, and you want to learn what is applicable to you in your specific business because every business is different. But the more you can understand cash flow and the difference between profit and cash in your business, the better your business will run and the easier you will find it. Speed up cash flow moving through your business and you will thank yourself. It's one of the greatest things you can learn in your business, and most Kiwi business owners don't put enough time into figuring out exactly how to do it.